Hello traders, welcome back to my YouTube channel, IPDATrader. Now in today's video, I will be providing you an in-depth explanation on how to actually trade institutional structure within the Forex market. Some of you guys were texting me on Telegram asking me for a video on structure, so here you go. My intention with this video is to provide as much information and value to you, so feel free to take notes, rewind certain parts, and just go ahead and get started, study, apply yourself, and you'll probably see good results if you follow this study material I'm providing on YouTube. The reason why I'm doing this video on structure is because I know sometimes structure can get very confusing, right? If we zoom out, this is a EU chart. We're looking at the 45-minute time frame. And if we go back in time and we look at something like this, right? You see this this bit of price action, it's very confusing, right? You have swings all over the place. You don't know where to focus. You don't know where your structure points are, right? You maybe try to sell some point in here. You say to yourself, okay, we now have a bearish trend. Let me try to get a sell as price comes up here, right? To take price lower, but price comes up, stops you out, and you're left wondering, well, why? And yeah, that's pretty much what this video is going to be about, so stay tuned. Okay traders, we're back on the drawing board and we're going to be taking a look at the three different types of structure at this point, right? So we can all agree that this is a bullish structure, right? Why? Because this is a sequence of higher highs and higher lows. So we're generally pushing up, and this is a bullish structure. Now the bearish structure is the same thing, just flip the other way around, where you have a sequence of lower highs followed by lower lows, right? And this is your bearish structure. Then you lastly have your consolidation market, where the market maker is essentially accumulating positions left, right, and center. Now, if those are buy or sell positions, we don't really know, and we will actually never know with 100% guarantee, but those are the three different types of market structure you will get. However, when you start looking at the candles, you will see that the reality is much different, right? You will never have a perfect bullish structure where prices just retracing perfectly and continuing up, right? Because otherwise everyone would just be waiting here and catching the buys up, and it would just be too easy to make money. And that's not what happens. You will never see a bullish market structure that looks perfectly bullish like this, because it would be too easy to make money. And if we look at the statistics, we all know that 95% of the people trading consistently lose. So that's not the reality. Matter of fact, we're going to get into the reality of a bullish structure. So let me go ahead and draw it. Potentially something like this, right? Okay, this is actually a valid bullish structure, right? And within structure, you need to differentiate between two different types. And this is pretty important, guys. So actually go ahead and take notes. We've got external and internal structure, right? Now, when we talk about external structure, let me actually go ahead and use, for example, red. So this right here would be your external structure. None of this nonsense in the middle where prices going up and down. The major swings that make the skeleton of the structure, right? Because you really need to think about structure like a human body, right? Your external structure would be the skeleton of your body. So if you connect the dots, using this tool, for example, we can see that we have a perfectly bullish trend. However, price is just not making a perfectly bullish structure, right? Price is having short-term bearish breaks, right? That then resume bullish and continue the overall trend, which is bullish. So now that you understand a little bit about external structure, we'll get to into that later. Let's take a look at internal structure, right? What would be your internal structure? Well, your internal structure would essentially be anything besides the external, right? Which is essentially all these points right here. all these points right here will be considered your internal structure or internal trend. It's essentially the same thing, right? And as you can see, we can very well have a bullish structure, but a short-term bearish internal structure. So that's where the confusion begins. Let me actually take a different color and label the internal points, right? This would be your internal structure right here. Let me finish doing that, right? So as you can see, price can very well inside a bullish trend, right? Don't forget we're overall in a bullish trend, but can short-term shift bearish multiple times to then just resume bullish, and you maybe try to sell some points over here, some internal lock marks over there, and then get caught and lose money. Well, that's the reason being is because you're not paying attention to the overall picture, which is we have a bullish trend, right? I'm not saying you cannot make money selling in a bullish trend, but there's just like trying to drive on a highway on the wrong direction, if I'm being honest. So let me go ahead and remove some of the stuff in here, not everything, so we can get rid of this. And let's continue talking about structure. So your external structure is pretty important, right? Because this is what's going to determine your higher time frame trend, right? So if we get it, this external structure means higher time frame trend, and your internal structure is your lower time frames trend. So now that you understand that, and if you actually know how to translate all this into candles, then you would understand that the higher time frame and a specific market structure that looks like this would be bullish. So you would be essentially looking for buys most of the times, right? Now, if you know how to trade ranges, and that's a topic for a different video, then you can potentially get into sales. For example, if you have, so this is your structure as we were discussing, and all of a sudden price starts coming down, right? And right in here you say to yourself, okay, we're just broken structure here, bearish, so I may want to take the risk because I know that with probability we can maybe get somewhere down in here because we need to retrace at this point since we just made a new high. So we may want to retrace, and I want to play that retracement. But you need to understand that you're playing that retracement, right? And nothing else. And you shouldn't be expecting somehow new lows and all that kind of stuff, yeah? So what I'm trying to say is that as long as you keep your high time frame trend and your high time frame ranges in mind, it's absolutely fine to maybe take a counter trend trade here and look for your sell down. That would mean your high time frame retracement to then continue pushing up, right? If there is going to be enough demand sitting below here, then the bullish trend is going to resume. Otherwise, you may get a, let me remove this, you may get a retest of the high, right? Maybe some supply in here, and then price will decide if it wants to shift bearish or if it wants to continue the bullish trend. In case you then come back to the highs, you get a test and price melts down and breaks the previous low, then your external structure would have shifted bearish, and then you can continue selling, right? Waiting for the retracements to then continue selling, because now you would have 1, 2, 3, and 4, and connecting all these dots, that would mean a shift in market structure, right? Let me get a different color, green, and that would mean that you are now in a bearish environment, and now you can take longer term sells and play the internal structure for buys. So yeah, that's what I want you to keep in mind in regards to external and internal structure. Your external structure is going to be your swing trades potentially, right? Because you're going with the overall trend, and your internal structure could be used for day trades or scalps, because now you know that you're playing the internal structure and that you have a range to fill and that you can potentially get somewhere over here. So that's that in regards to structure. And now we're going to move on back on the charts to continue explaining further stuff and showing some examples. Okay, traders, we're back. We're now looking at Euro USD on the 4-hour time frame. And what we're going to be doing is translating everything I explained you before into the candles and the charts. Okay, so if we look at the external structure of this chart, I think we can all agree that this is an important external structure. This right here is, and this right here is, right? If you connect the dots, you have a structure that looks something like this, right? And if we actually pay close attention, and I know this is difficult to see, but just bear with me for a second. If you zoom into the price action, you can see that this previous structure, right, this previous external structure got taken out by this wick right here, right? It barely reached above, but it actually did take it out. So now you have a potential shift in market structure because now we made a new high above the previous external structure. And this is stuff that I usually keep for my private mentorship. But as you can see, whenever you have a break in market structure with a tiny wick that barely reaches above it, that means we have a wick break BOS, right? You have a wick BOS. And what does that mean? Well, that means that price didn't have enough liquidity to continue pushing up. And for that reason is why you're seeing the entire impulsive move up being corrected right here, right? So every time you break structure with a tiny wick just reaching above or below it, that means that price needs more liquidity and with probability is going to retrace the entire move to then gather more liquidity in the form of orders and stop losses and then potentially resuming and continuing up, right? And if we actually look at the structure, a potential bias you could have on EU would be something like this, right? You could say to yourself, okay, we had this bearish pressure that just got taken out with this wick break-in market structure, which now I know that means that price needs to retrace all the way down to grab more liquidity to then potentially continue up, right? And this is actually something I'm waiting for, right? I'm waiting for any POI inside this region to continue potentially going higher. So now that you understand that, let me zoom into the lower time frames, maybe the 1 hour. And as you can see today, I was expecting buys from this region, but that's a topic for another day. So if we zoom into the lower time frames, we can see more external structure, right? You got one here, one here, one here. And if we just connect the dots, you would see that we could potentially be expecting bearish pressure. And that's why I was waiting for buys for somewhere in this region for a retracement. I know I'm playing the retracement. I know I'm in a range. And I know I can maybe get some pips inside of this range, right? I can expect something like this where I can have a move up from this region all the way into a POI somewhere in here to then continue dropping into the higher time frame external structure that is going to provide me maybe the huge move up, right? Another possibility is price coming all the way up here and then melting down to then resuming the higher time frame trend. Lastly, guys, I don't want you to get confused, wondering and asking yourselves, well, what time frame should I use for the external? Which one for the internal, right? That's not the point of the video. What I wanted to explain to you is the difference between the external and internal structure, right? You can potentially be using this 1 hour external time structure to play the 5 minute internal structure, right? Just putting everything together. If you know that within your 1 hour time frame you're hitting this external point, then well, maybe I can get a retracement all the way up. Potentially watching the 5 minute, I can get my confirmations and all that sort of stuff. And again, on the previous video, I actually described and gave you a complete trading system that makes money. So if you're confused on how to trade, just go ahead and watch that. So yeah, that's that. I don't want you to get confused wondering what time frame is the best for the external, which one for the internal. That's not really the point of this video, right? You could very well be using the 1 hour external structure to potentially play a 5 minute or a 15-minute internal trend. It's about putting the story and everything together, right? Structure alone will not tell you when to buy and when to sell. It's just to guide you and so that you understand where you are in your range. That's pretty important. And where you are potentially heading. So yeah, that was pretty much it for this video. I hope you guys found it useful. I will leave my Telegram username in the description. So if you have video suggestions or questions about the study material, you can always text me. I will try to help you out as much as I can. Now, until next video, I wish you profitable trading.